Good day, traders. Welcome back to Fides Trading Channel, and we are back again with another Fides Flows videos. In this particular series, I do a deep dive into the price action and fundamentals behind gold, Nas100, and Us30, giving you a clear roadmap for the trading week ahead. Using higher timeframe technicals, I identify key zones, momentum shifts, and trend structures, and then combine that with real-time economic drivers like interest rate, inflation data, and market sentiment. Whether you're swing trading or day trading, this breakdown helps you understand what's really moving these markets and where high probability setups might form. So, starting with gold on the 4-hour chart, we can see that gold is on a retracement to the downside with very steady bearish momentum. So despite the massive uptick from last week, this week has been predominantly bearish. And we can see that price has broken that break and retest level at 3385, and markets continue to push down. Looking at the market structure, our potential bounce level or potential level of support is at 3300. My expectation price will continue to the downside and actually bounce off there. As it stands on the 4-hour chart, we see prices trading below the 50 SMA. And we're very much trading with bearish momentum with the RSI trading below 45, above 30. So the confluences all point towards bearish momentum from the 4-hour chart. On the 1-hour chart, we can see that the markets are a little bit more choppy this week. We were sitting with a lot of bearish consolidation. At the start of the week, price did push bearish. We did start trading below the 50 SMA after the 3 o'clock candle on Monday. Price continued to trade below the 50 SMA. Very much showed bearish momentum signs coming out of the RSI, with price pushing back into the sweet spot and then continuing to the downside. Did see a lot of wick rejections coming out of the week to the upside, whereas wick rejections to the downside. But yeah, it was a very choppy week. So if you stayed out, not surprised. I do expect bearish momentum to continue. We also had a break off the bullish support trend line, as we can see here. Not a massive break, but the break did happen fairly recently. And we can see that price continues to push down. Now it is past 4 o'clock, it's 4:45 where I'm at, and we can see we had a strong push to the upside at the 3 o'clock candle at the opening bell of the US. But markets seem to have just be hovering within that fair value zone and looks to be pushing further down. It is worth noting that future prices are bullish at 3382, while current price is at 3367, and I still expect further downside momentum before there is a correction to the upside. So it's high potential of price pushing from 3386 all the way down to 3300, where there will probably be more buyers to capitalize on the discounted zone. Looking at US Tech on the 4-hour chart is a lot more choppy. We can see that this week, despite the massive drop that we had on Friday at the opening bell, throughout the week, the markets have just been very consolidative in nature, trading within a range. Moved up on Monday and then moved down Tuesday, Wednesday. Thursday, we also had some downside movement, but there was some recovery this morning with a massive gap to the upside. And then we can see now that the bears have taken control again. Now, as it stands, price was trading upon the 50 SMA for the majority of the week per the 4-hour chart. See price broke above, broke back below, kind of broke above, and now it's trading below. So what we're seeing is fair market value. Price is consolidating. Investors don't really want the market to move anywhere. And we're currently trading between the resistance at 22,000 and the support at 21,480. As it stands, this level's been tested 3 times. And as you can see, we had a gap up in this particular market today. We can also see that price has some bearish momentum more than bullish momentum, as we have more downside potential with price sneaking into that between that 30 and 45 zone, which is bearish, rather than the bullish zone above 55. Dropping into the 1 hour, we can see the extreme choppy nature of this market. So yeah, Monday we had some bullish momentum, Tuesday bearish, low bearish, Wednesday we had massive bearish, as well as Thursday. But then today, yeah, massive gap up. So it's very hard to actually read and predict the markets, which is also why I kept the analysis to a minimum. Because I myself couldn't see for my market directionality per intraday trading. So it would be more of a guessing game than an actual firm analysis. We can see markets breaking above 50 SMA, breaking below 50 SMA. And this continued into today for the Nas100 market. We can see massive breaks to the upside, downside, a lot of bearish momentum here for Tuesday and Wednesday, as well as Thursday. Today we had that spike at the opening, and then it seems now with the 4 o'clock candle that is clearing as we have a weak rejection to the upside from 3, and then the market seems to be moving bearish now. So not much market directionality coming out of this market, and it will be a little bit more evident when I do the weekly flows video on Sunday. But yeah, my guess is to stay out the market for today. Taking a look at US30. So US30 is a lot more bearish. We can see that we had some bearish momentum sneaking in from last week. We had that massive drop to the downside of the resistance level at 42,900. And for the most part, markets continued pushing bearish for the remainder of the week. We can see that we had an uptick on Monday, and then the rest of the week was very much a downtick, despite today having a strong bullish retracement. I did expect some type of break and retest here at 42,100, but the markets actually broke above that and invalidated that level. As it stands in the 4-hour chart, price was trading below the 50 SMA, and we are seeing more signs of bearish momentum than bullish momentum, with price trading more in that between that 30 and 45 zone than the 55. So clear bearish momentum there. So a lot of bearish confluences coming out of the indices, and yeah, I would expect that to continue into the rest of the week. We can see a little bit more bearish structure here with lower highs and lower lows clearly forming, and price currently testing that 50 SMA level. So that's US30. Moving on to the VIX, we can see that the VIX is currently at 20,000. At 20.56. This is a risk off, or rather risk neutral territory, which confirms why we're seeing fair market value and a lack of movement coming out of gold in the indices. It's because it seems that investors are happy with where prices are right now, and they're actually waiting for some type of fundamental event to create the momentum and the drive necessary to push price outside its current zones. So yeah, it is closer to risk on than it is to risk off. So we are expecting indices to continue moving higher while gold moving lower. There wasn't much in terms of fundamentals this week, as it was more secondary currencies. Let me show you. So we can see that during the week we had some FOMC economic projections on Wednesday. We had some retail sales on for the USD on Tuesday, but it was negative news for the dollar as expected, because last week was very negative. Yeah, NZD, AUD, CHF, pound, very negative. Not negative, but there was more red folder news for that. We had some Japanese news today, but yeah, nothing that really moved gold and the dollar and in turn the major indices. So that is pretty much the Fides Flow analysis for today. As I mentioned, the reason why I didn't post so much this week was because the markets were so choppy for both gold and for the indices, and there wasn't much to report in that front. But with that, I hope you enjoyed the analysis. Just wanted to update you before the week closes, and I will be back on Sunday with another weekly flows video. Hope you guys have a fantastic weekend, and I'll catch you in the next video, traders. Cheers.